So we bought our first Bitcoin in the fall of 2012, end of the summer, and I think they were around $8 or $9 a coin, so high single digits. And we've lived through at least three or four of these bull cycles, so this is pretty familiar territory for us. So we wrote a thought piece in August of this year. Saying that we think the price of Bitcoin will be 500,000 or 500,000 per coin within the next decade. So we think actually even at $30,000, it's still undervalued, and we think Bitcoin overtakes gold within this decade. Whether that happens in the next year or 5 or 10, time will tell. But we actually think it's currently a bargain at $30,000.
Tyler, I'm curious to hear your perspective on the reasoning for this bid of $500,000 per coin for Bitcoin. Can you explain the reasoning for how you got there beyond just this is the next gold?
Well, it really is about this is the next gold. If you look at the qualities that make gold gold, Bitcoin has those qualities or does better. So gold is scarce. The supply of Bitcoin is actually fixed. Gold's fairly portable, but you can send a Bitcoin around like an email. Gold's sort of durable, but Bitcoin's actually very durable because it's digital and it's math. So it's why we call Bitcoin Gold 2.0. We think it will disrupt gold. And the market cap of gold is $9 trillion right now. I don't know what Bitcoin's is, but for Bitcoins to be $9 trillion, each Bitcoin would have to be worth 500,000 a Bitcoin. So that's kind of how we back into that. We look at the market cap of gold and then divide it by what the price of Bitcoin would have to be worth $9 trillion, and we come out at 500,000. And why that's really important right now is it's because the money printing that's been going on really over the past decade, but that has really gone into overdrive with the COVID-19 pandemic. And I think something like the supply has increased, I think 23.5% in the past year alone, which is astounding. And the classic inflation hedge historically has been gold. If this was the 1970s, you would buy gold. If this was even a decade ago, you would buy gold. But now we have this digital version of gold that's actually better. And a lot of big investors are putting on the Bitcoin trade, and they're saying, well, gee, between these two, I see, one's this multi-thousand-year established store of value, and this other asset is this emergent store of value that offers an incredible upside in addition to protecting against inflation. And I think we're also seeing some companies actually buy it in their treasury, MicroStrategy being the biggest one. I think they've taken a $500 million position, and it's likely to be the trade of the decade. And it's all about basically protecting against the money printing that has been going on.
What is going to diminish gold from being a store of value for people moving forward? Is it just not going to be as good a hedge against inflation as Bitcoin or other cryptos?
Well, I think the one of the challenges with gold is its hardware. It's actually really hard to move. And in a pandemic or some kind of disaster force majeure scenario, gold's actually not really practical. Bitcoin's incredibly easy to move. It's information. You can just send it through the internet like your email. So that's the first issue. The second piece is we're all living online, and Bitcoin is programmable money. So it's really built for the future of the online world. So those are two things right there that sort of make Bitcoin more attractive. Obviously, gold has familiarity, and it's in movies, and it's shiny, and we use it for jewelry, and people have grown up with it. But if you talk to Gen Z or millennials, they don't want gold. They want software.
Tyler, anything to add?
Well, one point that I think is important that a lot of people don't understand is you don't have to purchase just one Bitcoin. You can purchase a fraction of Bitcoin or as little as $5 of a Bitcoin. There's a big misconception that you have to spend all $30,000 on one share of Bitcoin. So we think that if Bitcoin goes up to 500,000 a Bitcoin, it's about a 16x return from here. So you could put $5 into Bitcoin and potentially get a 16 times return. So we think that Bitcoin is inevitable, but COVID has definitely accelerated a lot of things. It's sort of accelerated the death of retail. Retail was going to, it was in the final throes, so to speak, and we're seeing all of a sudden now everything's sort of moving online a lot quicker. And you see that with Netflix and the FANG companies. A ton of value has accrued rapidly to these companies because of COVID. It sort of pushed us 3, 4, 5 years down the road. So we think that Bitcoin was always going to happen. It's just that COVID has accelerated the money printing, which has really accelerated the narrative and set the stage for Bitcoin, if you will. The other challenge I would add with gold is that gold's actually a very plentiful element in the universe. If you look at asteroids floating around Earth, there's billions and billions, if not trillions of dollars. Gold is just precious on our planet. And I think it's very realistic that within the next 25 years, someone like Elon Musk puts a probe onto an asteroid and potentially starts mining it for gold and silver and all kinds of metals. And there's already NASA missions in this direction for that. So that's another sort of near towards midterm issue with gold, which we can go and do more. But that is one of the challenges also facing it. You cannot increase the supply of Bitcoin. It is truly fixed. You can't mine more. You can't expand it, but gold actually expands with demand and as energy costs, which is the key mining input, decreases. So 2/3 of above ground gold stock has been mined in the last 50 years.